You missed the April 15th deadline. You owe a balance you cannot pay, and now the collection letters are arriving in your mailbox. These notices are printed with terrifying legal threats. Faced with this language, most people react in one of two ways. They either panic and pay thousands to a predatory tax relief scam, or they freeze up and throw the mail in a drawer. Both reactions stem from a shared misunderstanding. You are not dealing with an angry IRS agent. You are caught in an automated, indifferent machine. The IRS operates its collections through a rigid, highly predictable sequence. It runs exactly the same way for every individual taxpayer with an unpaid balance. Letting the letters pile up does not delay the process. It legally strips away your ability to negotiate before the government seizes your assets. This 5-step escalation timeline moves systematically from the CP14 up to the LT11. The system is governed by a strict trade-off. As you move down the timeline, your available time shrinks and your leverage drops to zero. In this system, leverage is your legal right to demand a payment plan or hardship status while being fully protected from involuntary asset seizure. The alphanumeric code in the top corner of your letter is not a random tracking number. It explicitly defines the legal reality you are living in today. You have to identify exactly where you sit on this timeline right now. It is the only way to build a survival strategy and protect your money. Looking at the green section of this timeline, we have the first phase, the CP14, CP501, and CP503 notices. Your balance is actively growing due to automated penalties and compounding interest. But at this stage, the IRS has absolutely no legal authority to seize your property. Your optimal move here is straightforward. For balances under $50,000, you can log into the IRS web portal and set up an online payment agreement in minutes. The very moment that agreement is submitted, the IRS halts the automated escalation sequence. The warning letters stop. You agree to pay the debt along with the standard penalties, but you maintain absolute control over your bank accounts and you avoid paying legal fees. This phase requires the lowest amount of effort and provides the highest level of protection. It is the cheapest and easiest exit ramp you will get. As we move to this orange node, the CP504, the tone shifts. This is the first time the IRS uses the phrase intent to levy. The language sounds terrifying, but the legal boundaries are specific. The CP504 authorizes the IRS to intercept any state tax refund you are owed. It also permits them to file a public federal tax lien. What it does not do is authorize a raid on your finances. The CP504 does not give the IRS the legal right to garnish your paycheck or freeze your checking account. If you ignore it, you buy yourself roughly 30 more days before the next letter. In exchange, you sacrifice your state refund and severely damage your credit rating through a public lien. Grave. This is your absolute last warning. It is the final moment before a bureaucratic annoyance escalates into an active legal threat. That threat arrives in the form of the LT11, also labeled as Letter 1058. It is explicitly titled Final Notice of Intent to Levy and Notice of Your Right to a Hearing. The IRS now has full legal clearance to empty your bank accounts, seize your personal property, and forcibly garnish your wages. This 30-day countdown clock attached to the LT11 node represents your single remaining defense mechanism, the strict window to request a collection due process, or CDP, hearing. Filing Form 12153 before this clock expires legally freezes all IRS collection actions. It forces the government to sit down and negotiate an alternative solution. Requesting the hearing pauses the 10-year statute of limitations the IRS has to collect your debt. However, it guarantees your legal right to propose a resolution while your money stays in your account. The reality changes entirely if you let those 30 days expire without taking action. You are permitted to request an equivalent hearing up to a year after the deadline. You can still dispute the amount owed or request a payment plan, but an equivalent hearing offers no legal protection. The IRS can and will actively drain your bank account while your negotiation is pending. Missing the LT11 deadline strips away your legal shield. You are reduced to negotiating against an aggressive, active threat with zero leverage. This matrix maps out the correct resolution path based on your objective financial reality, not on how much the letters are panicking you. If you are employed and can afford to budget a structured monthly payment, you look to an installment agreement. This permanently stops levies and keeps you legally compliant. It is the safest and most predictable path for steady earners. If paying the IRS means you cannot afford groceries, basic housing, or utilities, you apply for currently not collectible status. You must submit extensive proof of your financial hardship. If approved, the IRS temporarily pauses collections, though penalties and interest will continue to quietly grow in the background. If the math proves you will never be able to pay the full debt before the collection statute expires, you apply for an offer in compromise. This program settles your debt for a fraction of what is owed. In exchange, it demands an incredibly invasive financial disclosure, and approval is exceedingly rare without a tax attorney. If you apply for a program that your bank statements do not mathematically support, the IRS automated system will reject you immediately, wasting the little time you have left. In the IRS collection system, time is your most valuable, actively depreciating asset. If your mail has progressed past the CP 504, the era of easy, do-it-yourself online fixes is officially over. At the LT11 stage, professional legal representation becomes a necessity. A tax attorney's primary job is to file the exact paperwork needed to protect your income and navigate the strict appeals process before your 30-day clock strikes zero. The IRS machine is ruthless, but it is entirely predictable. To survive it, you must understand the exact legal weight of the letter in your hand